On Wednesday, the Fed had just raised the interest rate by another 75 basis points, effectively bringing interest rates to 3.25% now. Immediately after that, the S&P 500 be like, I don't feel so good, and gave a red day. Or in other words, it's just another normal day in the stock market. With the S&P 500 already down by 21% year to date, the question that's on everyone's mind is, are we near the bottom yet? Depending on who you ask, you'll get different answers. The bear will say that it could fall by 20% or even up to 53%, while the bulls say that we might be seeing the market bottom soon. In this video, I want to try to make a prediction on where the stock market is going. Will it crash even more, or will it start to go back up? But before I start, I would greatly appreciate it if you can help to tap the like button and subscribe if you haven't done so. In return, I'll show you some capybaras chilling. Alright, let's start right now. Let's talk about inflation first. The inflation rate has actually been steadily going down from 9.1% to 8.5% to 8.3% now. So all is good, right? The market doesn't think so. Because right after the inflation data was announced, the stock market started crashing. Why like that? Check this out. Energy, which is supposed to be the biggest contributor to inflation, started coming down. Partly it's because oil prices peaked in June and have been steadily trending downwards. So, by right, if energy prices started coming down, inflation rate should come down too, right? Okay, here's the problem. The inflation rate is still high in other places. Food, medical care services, and new vehicles all increased by 0.8% in August. Shelter costs went up by 0.7%. Shelter costs basically means housing costs, stuff like rent, mortgage, condo fees, and so on. And housing costs contributes to 42% of the CPI. Because of that, inflation still remains high. And the Fed has no choice but to keep raising interest rates until the job is done. They be like, I can do this all day. There are 2 more Fed meetings left this year. So how much more can the interest rates go? Hint, a lot more. After the Fed meeting, the Fed released this summary of economic projections. Here, they projected that by the end of 2022, interest rates can be raised to as high as 4.5 to 4.75%. Right now, we are just between 3% to 3.25%. So that's easily another 150 basis points by Christmas. Ho ho ho. Next year, they expect to raise interest rates all the way to 5% before starting to come down by 2024. And in the long run, return back to the normal 2 to 3% range. Which brings us to the question, where will the market go from here? Now, of course, I don't have a crystal ball. So all these are just my predictions, yeah? And of course, it doesn't take into account any new unexpected events, like if there's another new war happening in Taiwan, or new pandemic, or aliens coming to visit us. Then of course, the market can easily boom and crash back down. First, a short-term prediction. 2022 is a midterm election year where there will be elections to vote for members of the House. Capital Group found that from 1931 till now, the stock market tends to underperform during midterm election years. But they also found that typically, during midterm election years, the market bottoms at around October, then starts going back up after that. They also saw that in all the past midterm elections, the market has always given positive returns 1 year later, giving an average of 15% return, while all the other years only gave a 7% return. So does it mean that the stock market will start going back to the moon? In the short term, I don't know. It can easily go up or it can easily go down. It's just that if history repeats itself, we might see the stock market going back up in the short term. Quick pause, let me quickly share about the sponsor of today's video, Moomoo SG. Most of us are only able to buy and sell US stocks during regular trading hours from 9:30 to 4 PM Eastern Time. But with Moomoo SG, you are able to start trading during pre-market hours from as early as 4 AM Eastern Time, even before the market is open. And after the market closes, you can still continue trading after hours all the way to 8 PM Eastern Time. With extended trading hours, instead of having to wake up in the middle of the night just to trade, you are now able to trade at a time which is much more convenient to you. This data is available for free to all Moomoo SG users. On top of that, if you sign up now and deposit 2,700 SGD or more, you will be able to receive a free stock worth up to 1 Amazon stock. and receive a $40 cashback coupon. So if you have not signed up yet, you can sign up using my link down below. With that being said, let's get back to the video. So that brings us to the second point, interest rate hike. Since the rate hike started this year, the stock market hasn't been doing so well. With interest rates potentially going up all the way to 5%, what will happen to the stock market? Crash! Just kidding. Interest rates up doesn't necessarily mean that the stock market will crash. Check this out. In 11 of the past 12 rate hike cycles, the market have given positive returns, giving an average return of 9.4%. And if we zoom in a bit, in the first 3 months, the market has only given positive returns 50% of the time. Over 6 months, the chance goes up to 75%. Over 12 months, it becomes 100%. So even though the current rate hike cycle may continue all the way to 2023 or 2024, we will likely see the market going back up even before the rate hike cycle ends. But what about the scary quantitative tightening? The last time we did QT, the market crashed by 20% in 2 months. And the QT now is even bigger and faster. Personally, I'm not too worried. First, all of us already know about this QT thing, so maybe it's already priced in. Second, the money QT is actually not that large. Currently, the money QT is $95 billion every month, but the Fed's balance sheet is $8.8 trillion, almost 100 times the money QT amount. Bloomberg also mentioned that there's a reverse repurchase agreement of $2.18 trillion, and there's a Treasury General account of $1.8 trillion. So in comparison, this $95 billion money QT is actually quite small, and the effect may not be that big at all. So interest rate hike and QT may not crash the market. Then what about recession? Everyone thinks that a recession will likely happen soon. But again, just because a recession can happen doesn't mean that the stock market will crash. In the past 13 recessions, the market has gone up by 7 times and gone down by 6 times, while giving an average return of 1.7%. Basically, the chances that the market will crash is just 50-50. So then, what can really cause the market to either crash or go to the moon? And that is inflation. Right now, even though inflation is still super high, inflation expectations for the 2-year and 5-year are going down, meaning everyone is expecting inflation to come down soon. Even the Fed expects to see inflation peaking in 2022 and start coming down in 2023. And analysts noted that in each of the past 7 inflation cycles, the stock market bottomed whenever the inflation rate peaked. Adam Khoo shows this happening. Inflation rate peak, stock market goes up. Inflation rate peak, stock market goes up. And inflation rate peaking, stock market goes up again. And if the current inflation rate has peaked, that means we might be near a market bottom soon. Or maybe it has already happened. Oil prices have started to come down. Rental cost is starting to come down. Home sales are dropping. House price growth is starting to slow down. Global food price index is coming down. Commodity prices are coming down. So if you add all of this up, chances are inflation rate may be peaking, and we could very well see a market bottom soon. So does that mean the stock market will start going back up? Of course not. Unexpected stuff can still happen. And in this case, it's the Russian-Ukraine war. Putin once said that he can take Kyiv in 2 weeks if he wanted to, which I guess he didn't want to do it because the war has already lasted for more than 2 weeks. Basically, Russia is having trouble taking over Ukraine. Earlier this month, Ukraine has even managed to regain some of their land, and Russia has lost a lot of troops already, while the rest are losing morale. Meanwhile, back in Russia, some government officials are getting sick of the war and are calling for a dissolution while demanding Putin to resign. At the same time, some important Russian people are falling out of windows, falling out of boats, and even more accidentally dying. So Putin is getting desperate. And what will he do if he is desperate? He might try to do a scorched earth policy. Basically, if he is losing, no one can win. He has done this before in Chechnya and Syria, and he could do the same to Ukraine now by bombing gas pipelines, destroying power grid, or even worse, use nuclear weapons. This time he says he is not bluffing. Will this happen? I hope not, but it's certainly possible. Okay, here are my thoughts. Knowing that inflation has peaked, the market could go up. But if Putin decides to come and disturb, the market will crash. how to invest then? Should we just hold and wait for a crash? Personally, I feel that it's pointless to plan for black swan events, as it may or may not happen. If history has shown us anything, it's that the chance of the market going up is way higher than the chances of the market going down. So I'd rather just buy now and pray that the market will go up, rather than wait for a bottom that may or may not come. If it goes up, great. If it goes down, I cry a bit, then I buy more. Over the long term, I will hop big because stocks. Anyway, that's all for this video. Hopefully, it helps you out. Like, share, and subscribe as I'll be posting new videos every Monday, Wednesday, and Friday.